So do I think the price of gold is going to a trillion or a quadrillion like it did in Weimar, Germany? I think it won't get to that. It could go a lot higher than we're now, and I think it will. I don't know the price, and I think the dollar and the rest of its minions, other fiat currencies, they will be toast when you can't get any more gold or silver with them, and then they'll have to. Well, they don't have to, but they'll probably will. The powers that be will try to drum up some new system and to regain confidence. Hopefully they won't, and hopefully the free market and sound money like this, right, and gold will come back.
Paper money always dies the same way, slowly at first, then all at once. That's how Mario Innecco, the seasoned investor and economist, describes what's unfolding right now. He says governments and politicians don't want people to grasp what inflation truly is. They hide behind the CPI and other manipulated statistics, but those numbers only show the damage after it's done. The real cause, he argues, is the endless creation of money and credit out of thin air, and that process hasn't stopped for a moment. Innecco believes we've entered a crack-up boom, a phase where people are desperately trading their paper money for anything real, food, property, gold, silver, not because they need those things immediately, but because they no longer trust the currency in their pocket. When confidence dies, money stops functioning as money. People simply want out. He doesn't see gold soaring to absurd nominal levels like $1 trillion, but he's convinced it's heading much higher as the dollar continues to erode. To him, this isn't a speculative frenzy, it's survival. The final stage of every paper money system is panic buying of tangible assets, and that's what we're starting to see. Eventually, Innecco expects fiat currencies to collapse under their own weight, forcing governments to launch a new system to restore order. His hope, though, is that instead of another centralized fix, the world embraces sound money again, gold, silver, and a market-driven system free from central bank manipulation. What's happening in precious metals now, he says, is simply the market waking up to reality. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
They don't want you, and by they I mean the governments and politicians, they don't want you to know what it is. They want you to think it's a tinkered, manipulated statistic called the CPI. No, that's the result of inflation. And inflation, of course, is the creation of currency and credit out of thin air. They're still doing that. And before I proceed, I just saw a clip of Jay Powell, the chairman of the Federal Reserve. I think it was yesterday or very recently. Someone asked him what he thought of the gold price right now. That was it like a signal that we're going to have inflation? And he refused to answer because he's trying to fool you still. He said, I don't comment on on assets. So, he's under pressure. So, a breakdown occurs. Well, I think that's where we are right now. The cracker boom appears. Everybody is anxious to swap his money against real goods, no matter whether he needs them or not, no matter how much money he has to pay for them. So I think gold is more right now. It's not like in the 2000s. So yeah, as you can see, the chart now for the dollar has been evolving over a longer period than the one in Germany, but it looks very similar. It's like if you know about fractals, right? It's like the same wave formation, but different amplitudes or different sizes. And I think it's a disturbing similarity or disturbing resemblance, as I say here. So let's continue with the cracker boom. It was this that happened with the continental currency in America in 1781. So yeah, it has happened before in the United States, but it was a very long time ago. That's why most people don't think it can happen again. With the French mandats territoriaux in 1796, I would add also the assignats to that. The mandats territoriaux, that currency that came after the assignats, they didn't even issue it. It just collapsed before it was issued. And with the German mark in 1923, it will happen again when the same conditions appear. If a thing has to be used as a medium of exchange, public opinion must not believe that the quantity of this thing will increase beyond all bounds. Inflation is a policy that cannot last. Yes, and they do talk about the debt in the FT article, but still, they don't talk about hyperinflation or the crack up boom. So do I think the price of gold is going to a trillion or a quadrillion like it did in Weimar, Germany? I think it won't get to that. It could go a lot higher than we're now, and I think it will. I don't know the price. And I think the dollar and the rest of its minions, other fiat currencies, they will be toast when you can't get any more gold or silver with them. And then they'll have to, they don't have to, but they'll probably will. The powers that be will try to drum up some new system and to regain confidence. Hopefully they won't. And hopefully the free market and sound money like this, right, and gold will come back. It's one of the reasons why I've been on YouTube since 2015 trying to inform the public that there is a way without central banks, and that's sound money, of course. So that's what I think. I think what we're seeing in gold and silver is not a bubble, but it's a safe haven play away from dying fiat currencies.
Mario Innecco says what we're seeing now, people rushing into gold and losing faith in money, is exactly what Ludwig von Mises called the start of a crack-up boom. It begins quietly, with only a few noticing that something's wrong, but once the public realizes their money keeps losing value, the shift accelerates fast. That awakening, he says, is already underway. The wealthy can absorb higher prices for food, fuel, and essentials. For everyone else, the squeeze is daily and inescapable. Every paycheck buys a little less, and no policy speech can fix that. Eventually, people stop trusting the currency altogether. History shows that once confidence breaks, collapse comes quickly, sometimes in weeks, sometimes in days. Money, whether paper or digital, simply stops working as a store of value or a medium of exchange. Innecco doesn't try to predict the exact moment it happens, but he's sure it's coming. And when it does, he believes physical gold and silver will vanish from circulation, not because they've lost value, but because no one will trade them for dying fiat money. His warning is simple: don't wait for the headlines to confirm the crisis. Get out of paper promises while you still can. Let's get back to the interview.
I read through that article in the FT. I'm not going to read it, the whole thing for you. And they've talked about Japan, how the Japanese public is getting involved in buying gold. And you're probably not surprised because I've been warning about Japan. I've been following the price of gold in Japanese yen for a very long time. And I've been telling you that Japan is leading the way in terms of currency collapse. And you probably remember me talking about the price of gold in yen when it was below 400,000 yen. Now it's like 630,000. And it's no surprise that the public is waking up there. And they also talk about how central banks have been buying, non-Western central banks have been buying for the last few years. They talk about how ETF demand is high. They talk about how this debasement trade is pushing gold. People concerned about inflation. But all in all, they say it's a mania, and they seem to trust the central banks, just like they did here. They said central banks have got it under control. There will be no inflation. And they were wrong. So this is what I think is happening now. People like in Japan and other places, and even here to some extent in the UK, apparently the Royal Mint said consumer or retail demand has gone through the roof. It's very strong, but I think it's still early days. So we're going to go through what the cracker boom is, what von Mises says about it. And as I said, it's in this book, Human Action, on page 428. So, but then finally the masses wake up. Well, there you go. The masses are waking up. The very wealthy don't really feel it because they're comfortable. They don't care about restaurant prices, food prices, or utility prices going up because they probably don't even pay it themselves. They have people who work for them who take care of it. They're not concerned about it, but the general public is. They're seeing that everything is going through the roof, that their currency is not buying as much, right? Within a very short time, within a few weeks or even days, the things which were used as money are no longer used as media of exchange. They become scrap paper or scrap digital entries nowadays. Nobody wants to give anything away against them. So he says here, within a very short time, within a few weeks or even days, do I think this is going to play out like that? I think it could, but looking at this chart here that I'm going to show you now, comparing what happened in Germany in the 1920s, you can see that it's a shorter period chart than we have now for the dollar. So things happen quicker. But one thing I would say, when people wake up, the crack-up boom or hyperinflation, loss of confidence, the loss of confidence in the currency happens overnight. So yes, it might take longer in the lead up to that loss of confidence. And I think it's difficult to say when it will be. But once it happens, you won't be able to get gold or silver for the currency. That's why it's so important to still, in my opinion, try to get out of fiat currency while you can.
Something deep is shifting beneath the surface of the global economy. What we're witnessing isn't just inflation or market volatility, it's a slow unraveling of faith in the very idea of fiat money. The system has been stretched to its limits by years of debt expansion, artificial stimulus, and financial engineering. Now, ordinary people are sensing what economists have long ignored: printed wealth isn't real wealth. Across nations, currencies are losing meaning, and tangible assets are reclaiming it. You can see it in how physical gold is harder to find, in how silver premiums keep rising, in how more people are quietly trading paper assets for things they can hold. Confidence, once the glue that held the system together, is thinning fast. Governments will eventually try to patch it up with a new digital model or rebranded currency, but history suggests that once trust evaporates, no decree can restore it overnight. The real transformation won't come from policy, but from people refusing to play the same rigged game. If the global shift away from fiat accelerates and tangible value becomes the new standard, will this be the first monetary reset driven not by central banks, but by the public losing faith in the very money they issue? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.